Hello, everyone. Yes, trades and the positions that we have on, and how we are interpreting the markets right now. Bitcoin is still, once again, in this negative cycle, which is supposed to last and maybe supposed to end for over the next 3 to 4 months. Usually, this down cycle takes a lot of time, 1.5, 2 years. So we shall see how it's going to play out this time. But what I'm seeing currently is, once again, we've told multiple times that this was not a buy. This is not a buy. You should not be buying that. And yes, we were expecting something like that to happen. We shifted trend here again on this day, and as soon as we shift trend, we just break down and roll over. One good sign is, as you can see, we shifted trend here once. That was a massive move, but that move broke tail in here. The other time we shifted trend was here, and we clearly broke the previous tail lower low. But right now we shifted trend and we just fell into the previous low here. So what it sets up for is a potential for, once again, this is an uninvestable asset class as of this moment, that's for sure. We are going to probably consolidate in here for a while, and ultimately what this sets up in this fall, we might see start picking this up for this type of movement. This type of movement, as we've said multiple times, is going to be even more and more muted. Thing is going to be consolidating. I do not expect this to. It would be nice if it touches the previous all-time highs. I don't know even if that's going to happen, honestly. But we shall see what. Well, we're going to see in a couple of years. But yes, the only thing that is actionable here is selling bean long hood via shorting put spreads and shorting call spreads on MSTR at the same time. I'm waiting for another retracement on a trade basis here, higher into whatever this gives us, and then I'm gonna start selling call spreads on MSTR again. We've sold call spreads on coin. We closed that position. It was a nice position to have. Or coin, we shall see what we're gonna play, but. If there is a reaction, as soon as we get the trade retracement and the trade top end, we're going to be selling into call spreads into all of that. This is one thing potentially we're looking for. Dixie is a positive trend, positive tail, positive trend, positive everything, reflecting the dynamic in rates, which we are going to discuss in a little while. I don't see that there is actually anything to do here in Dixie. For the simple reason, Vorsh is most likely going to be very dovish on rates, but very hawkish on the balance sheet. And I just do not know and don't understand at this point how market will be reacting to him being hawkish on the balance sheet, and what he will announce on the balance sheet. Is this going to be some actionable things that he's actually going to be implementing over the short to medium term, or if that's just an idea he's floating out there, or if there is anything actual going to be happening? So this first meeting has a chance to create a lot of volatility. Like, this is a lot of big known unknowns, so we're going to see how we're going to play that. But I don't think that that meeting necessarily is going to be very positive for the currency, for the Dixie. So there is naturally nothing to do in here, honestly. I do not expect a lot of movement in the Dixie or major breakout in either way on the Dixie, to the upside or to the downside as of this moment. Oil. What oil gives you currently is one thing to flag, which is its relative weakness, unbelievable relative weakness. Once again, the news that we had previously, if those news would have happened like this weekend, for example, restarting of the war, new strikes, and once again confirmation that the ceasefire is non-existent essentially, and the war is still going on, even though without the direct involvement of the U.S. Army. Uh, Not to the fullest extent, obviously, but the Strait of Hormuz is still closed. And what we have now is oil clearly testing trend, even though we had a lot of negative news around all of that. And you would have, people were expecting that, well, get ready for the oil to open as it usually does, like 5-7% higher. And it didn't. Like, it just didn't. And it just shows the relative weakness. And you never underestimate this relative weakness and always pay attention to it. So oil, it really wants to break lower. Oil really wants to go lower from here. It just needs some sort of resolution. So it doesn't mean much doesn't make much sense to be longing oil into this relative weakness, because what we have currently is oil negative trade, yet it's testing trend right here. This is your trend. We've tested it once, and we are testing it 3 times. And I think this is like, we are very close to resolution in oil here. Whether there's going to be another move higher, like we've seen right here, this was multiple tests of the trend and then continuation higher, multiple tests of the trend and then continuation higher, or oil just breaks trend and this whole debacle and this thing is as good as over. So what this provides is a nice potential hedge to your long positions in equities. We're going to get to that. This is a very, very, very tight stop close to the trend here, and doing some sort of 110, 120 call spreads 36 days out, risking 1 to 8, risking 100, making 100 gives you a really nice cheap way to hedge the worst case scenario, essentially, in oil. And in this trade, you're not going to be losing those $100, because as soon as we break trend, you're going to get out of this, and out of those $100, you're going to lose maybe 50, 60, 70 dollars. So this is what we've put on. We have relative to the size of our net exposure to the risk assets. This is how we're hedging our exposure currently. The other notable risk event, obviously, is the next week's Fed meeting, and this is the first meeting when the Warsh is going to be doing the press conference, and he's going to set the tone, and it's going to be very interesting what's going to be going on there. So another potential risk scenario. Essentially, we know there's going to be positive on rates. We know that he's going to be positive on rates, meaning very dovish. We don't know how hawkish is going to be on the balance sheet, and how market reacts to that hawkishness on the balance sheet, and how big of a magnitude of a reduction he wants to implement. So that's an interesting thing. Generally, XLE, XOM, and all of the corresponding equities and proxies of oil are still positive trend. Everything is positive trend in here, but very close to breaking it. And the fact that we are in we are not reacting to the news that positively says that, well, oil is very, very weak. But as a hedge, it makes a lot of sense. And as soon as it breaks, we're just going to be out of this. The range is very clear. It breaks this low, the oil is done for, essentially, and we will be looking to sell and short this volatility. But if it doesn't, once again, if it breaks this high, and then, well, most likely we're going to see a continuation in this move. I don't think it's going to take much, a couple of weeks maybe at most. UUN, very correlated to gold prices, negative trend, negative tail, not a good look for CCJ or any uranium-related plays. All of them are negative trends, so nothing to do in here. Gold surprises me very much. So yes, we've seen this repricing, but if you wanted to see gold continue higher, it should not be as weak as it is right now. The relative weakness in gold is unbelievable, and essentially in the entirety of the complex of the gold of metals. If you look at silver, if you look at platinum, palladium, all of them negative trends, some of them negative tails. And by all means, it looks like this is essentially all over. Essentially, if you look at silver, Yeah, this is literally the secular end of this move. Essentially, this is it. Like this thing is over. So, what we had is this: we had this parabolic move higher, and now we are in here. There we go. This is the end of it, essentially. I'm really worried that I don't know if gold can really decouple from silver from here and really print all-time highs, even though all of the fundamental reasons why this move happened are still in place. So I don't know. I just do not know what's going to happen, but I know that this is not a long. This is for sure not a long, and especially if we shall see. We shall see how. Well, essentially, you don't want to be long this, obviously. But what you want to be doing is selling this gold volatility, likely to print a lower high, especially after the Warsh's press conference, and do something in there in gold. Either sell, we shall see how and where it's going to be in a position relative to its trend and trade risk ranges. We don't have any position here. We've sold call spreads on it, and we already closed it. Copper, test and trade, one of the better plays overall in commodity space, the only essentially play in commodity space which is positive trend, positive trade. What we're looking here is whatever the volatility comes, whatever the Warsh meeting, blah blah blah, probably going to be selling call put spreads on it and being long of it. Nice exposure on the long side. 2-year yield, this was the peak. We've had the CPI print, it printed 4.25, and yeah, the inflation is as good as, not as good as over, but the short-term peak in inflation is in for the foreseeable future, and this should be reflected in yields, and at least at the short term, at the short end, as once again you had this initial move higher, repricing in future inflation expectations, clear trending retracement after this break move. You should have been buying that. That's another move higher. We broke this previous trend, but right now what we have is we are incapable of breaking the previous trend. So if you look at like Z, so 3 months futures, December 2026, there is potential to creating of a high low, because we know that this was the peak for the inflation. For the foreseeable future, we know that Warsh is going to be asymmetrically dovish, even though markets, for some reason, even now prices in 25 basis point hikes. This might be, ZT might be a decent long from here, or at least this is not a short. 10-year is reflecting that. What we had is once again move higher. Most likely we might see a consolidation here and essentially nothingness. Again, nothingness in the long end of the US yield curve, unless it reacts very negative or very positive. I do not know how it will react to the new policy of the Federal Reserve, which will be enacted by Warsh. So we shall see what's going to happen there. So we don't have any positions here, but general outlook is if Warsh is catalyst. Overall, that meeting is not a catalyst. Consolidation, not much happening in here, which should be positive for gold, but now it's just secular cycle ending type stuff, and that's unfortunate. European yields, overall European yields are still positive trend. They tested trend in here. But right now, everything in yield space is still positive trend. Japanese 30-year, 10-year positive trend, 2-year positive, Britain positive trend. Whatever you look, it's still positive trend. Well, naturally, so the entire rate complex in the world, in the world that matters, in the US is still positive trend. And gold is reflecting that, and essentially everything else is reflecting that. Dixie is reflecting that, and I don't really see that we are going to get a massive reversal or break of this trend in the near term. High yield is negative trend, naturally. That's how it is. Kind of interesting. If Warsh announces, is high yield a good short here? It certainly is from the perspective of the signal, but we're going to see how that plays out. Negative trend, which is not a good signal for equities overall. In general, not a good signal for equities. Equities, testing trade currently, still positive trend, but VIX broke trend, so I am not sure that this trade is gonna hold. But what we are currently doing is we're still selling 710, 700 put spreads on SPY. We are rather neutral exposure to beta. We're gonna see. I think this thing generally is reflecting the next Fed meeting, next week's Fed meeting as a catalyst, and not the CPI essentially, because yeah, that's I think that's how it is, and this VIX move higher is still reflecting that. If that thing is this reflects the restart of the war and the active phase of the war in Iran, then we have that covered. We pretty much neutral on beta, and we still have that short or long position in oil. If we're gonna be VIX breaks trend and SPY breaks trade, and generally going to be getting a negative scenario once again we're neutral on beta. If that is connected to the Warsh meeting and somehow some sort of a 2018 crisis when he announces like his desire to cut Fed balance sheet by he said like $2 trillion, upwards of $2 trillion. I don't think the market is going to take kind to that. So if that's going to be a catalyst, we're going to see how we're going to play this, but we're going to be acting on this as the meeting nears. So what we have on right now is Meta broke trend here, clear breaking trend. We've sold call spreads on Meta. Amazon broke trend. Bad trade on Amazon. Well, not a bad, just natural. We've sold put spreads in here once we've tested trend in here. On the down day, it was very nicely executed. We could have taken the gain that we had on these days, on these couple of days, but we didn't. Once again, we were betting on it not breaking trend, but it's just natural. If it breaks trend, like that's a stop loss. Broke trend in here, took a loss here. What we did, another thing that we did is Meta, we sold call spreads on it. JPM, we sold puts on JPM. And Nvidia as well. Even though earnings were incredibly good, all of that, Nvidia has been and remains very weak relative to the entirety of the markets. For some reason, I'm lagging. So Nvidia broke trend as well, which is negative. So on this breaking trend, we are selling put spreads or call spreads on these couple of things. Relative to JP Morgan longs that we're selling puts on JP Morgan in the same size that we usually do that. It's our general size of the position. Puts on JPM as its bullish trend, positive trade, relatively strong name. Nvidia broke trend here. And yeah, as of now, this is FSLR. We've sold puts on FSLR 220, 210. This is your trend. What we have is a unusually large retracement, not retracement, but reaction. First of all, we had unusually a large move to the upside, just on flows essentially. The entirety of the complex of the renewable energy moved higher significantly without any news essentially, but just flows went into the sector pretty big, whilst the beta was really positive on a short-term basis, and we just ran into the wall in here, into the all-time highs, both here, both cycle high, both previous cycle high, that's even all-time high if I'm not mistaken, yeah. And this is your proportional, when you have this massive move, this is your natural mean reversion. We might have been early, but we're gonna see how that plays. What we are expecting essentially is a move lower right here, but it's holding trend, and then some sort of this consolidation. That's what we are betting on here. The other thing to mention here is that the implied volatility, 64-week implied volatility is incredibly high. Like it's an all-time high. So yeah, not selling that volatility is a crime. Generally positive on the sector, very much positive in the sector. All we need is for beta to stabilize, and this thing will stabilize as well. So we are okay here. Yeah, that's it. From the perspective of the asset allocations, once again, there is nothing to do in here. There is no asset allocation to be made in here as of now. We are preparing over the next months. If we're gonna get what we're gonna do here, most likely, if we're gonna get a dip below 60 into 50,000, which we were calling for since this entire move began, like a year ago, yes, we're gonna start initiating long positions, like long-term long positions, like 1.5, 2 years out, because at that point the prices are going to be on options are going to be pretty good. I think on IBIT we're going to be start initiating those things like what is it, like 50, 60 or 50, 70 call spreads 2 years out, or just buying in the money put calls. We shall see how it's going. And we're gonna put a minimum, like if the position that we want to build here is upwards of 10%, we're gonna be like legging into this with a like 3% position. Yeah, so we're gonna be doing that as it comes, but there are no signs of this ending essentially as of this moment, and naturally there should not be any signs of that until we consolidate in here. We shall see what structure we build in here actually, and how this is going to end. Yeah, Dixie, I don't think you should be, there is any, on a trending basis, there is nothing, more of the same thing, essentially. This is your nothingness, essentially nothingness. There is no dislocation in currencies. Well, there is the dislocation in USD CNH, and it will continue lower, but no way to play this accurately. Oil, from the trade perspective, it's okay. From the trend perspective, it's still okay, because once again, we are at this pivotal moment. It's either here, it's like, well, it's either big up move or a slow trickle down lower, like once again, like every single move in oil ends is this, like lower, 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 with weeks like this essentially. Oh my god, lower. So that's why if we break, we're gonna be start selling call spreads on it, selling call spreads, selling put spreads, just shorting volatility, because volatility is still relatively elevated to the norm essentially. But no trending allocation here, no trending allocation in uranium. This trade is over, unfortunately. No trending allocation in gold. This trade is over, unfortunately. Not many places to have your money as of this moment. Trending allocation to copper is really nice, but what really nice is just continuously selling puts on copper in here, like continuously selling and rolling puts and selling into the weakness. This thing will continue, should continue higher. Because once again, what kind of asset? What you just don't want to have a linear position here in CPR or whatever. Expected return is not that good. In rates, there is a potential allocation to play the trend following, to initiate the trend following position in rates. If once again, I think market is underpricing the dovishness and overpricing the rate hikes, so there is a sign that we are failing to break this trend high, and if we break here, if we break the trend here, I think it makes sense to start shorting this, to being long this, or being long ZT, or being long Z 2026. So far, and we might put a trade expecting dovishness from Wash, but we shall see if we're actually gonna do that or not. But well, no trending allocation here in rates. No trending allocation in rates. This is really negative sign. What you should be allocated to is equities. Equities are still. If you look at indices, this retracement most likely will provide a decently nice opportunity on a trending basis to get long of it. So that's where you want to be looking to build your allocation over the medium term on a trending basis. I mean, the linear position. It all hinges, as of this moment, yes, we still have, once again, oil, blah, 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 but that the reaction to the new policy of the Federal Reserve, it's even more imminent and even more impactful and important in the short term right now. So it's either a normal standard retracement within a bullish move, like we've seen, like this, or is going to be something bigger. It all depends essentially on how markets absorbs the new washes Fed, essentially. Yeah, so that's what we are looking for in terms of the ideas. We're going to be playing this with indices most likely.